So let's get started. So today we're going to be talking about how to apply for small business administration loans. So Scott is going to be monitoring the chat for me. So if there's a question that I miss, he'll interrupt me and ask. You can also unmute your mic to ask questions as we go too. So we're going to go over like how to apply for these loans and who is qualified for what kind of loan and all that stuff. Now, each of these loans are totally different. So each one is going to be a totally different kind of loan that we're going to have to be talking about. I'm Cindy Finkenbinder. I'm with Alpha Omega Accounting. The link to my website is down there. We are going to be putting on our website, there's a blog on there, but as this stuff changes, I will be putting that in the blog. You can also sign up for our newsletter and to get information. I'm also on Facebook, and you can always ask any question you want. Okay, so basically there are two new loans that we can use. One of them actually enhances an existing loan, and there's also a new forgivable loan. So, but the forgivable loan is really interesting because each one of these loans has different criteria for whether or not it will be forgivable. These are not available for cannabis businesses at all because they are still considered illegal for federal. Hemp businesses, however, can apply for them. So if you know anyone that needs those, now there are some local loans that the cannabis businesses can apply for, but those are at the state level. They are not available if the person who owns the business has 50% or more of the company, is more than 60 days delinquent on child support. So if you have child support issues out there, you cannot get one of these loans. The applicant does not present live performances of a sexual nature. In other words, you cannot be doing pornographic websites and stuff like that and get one of these loans. Gentlemen's clubs and stuff like that don't count either. If more than a third of your gross annual revenue is from legal gambling activities, you cannot get one of these loans. So that means the casinos are all out of luck, even though they are completely closed down. You cannot be a lobbyist, you cannot be a government entity, and you cannot be a member of Congress. I thought that was interesting. This is probably the only thing I've ever seen Congress do that excluded them from something. Faith-based organizations are eligible. So if you have a church or something that is having problems with paying their normal expenses due to donations and stuff being down, these are available to the to faith-based organizations. Now then, the PPP loan, which is the Payroll Protection Program, and you're going to see this all over the internet. I think it's a really funny acronym, but it's called a PPP loan. This is an extension of the SBA 7-A program loans. And so it is a loan that was already in place, but they did some slight changes for it that only apply for this year. Any small business can apply for this, up to 2.5 times the average monthly payroll costs, up to $10 million. Now keep in mind, these originally were for only those businesses with 500 or fewer employees. But the PPP loans actually can go higher than that. They can have more employees depending on what industry they're in. Restaurants and hotels fall into this category. In order to get a PPP loan, it has to pay payroll costs, mortgage interest, rent, or utilities to be able to keep your business going. Now, because it's mortgage interest, that means that you're going to have to talk to your lender about not having any of the paying any of the principal at this time. But it will allow you to continue making the mortgage interest. These are a non-recourse loan, meaning that you don't have to have collateral to be able to get them. And they are also a, okay, something popped up on my thing. Okay, it's a non-recourse loan, so you don't have to have collateral. You also do not have to do a personal guarantee. This is a business loan. Most SBA loans, you have to do a personal guarantee by the owner that it will be paid back. But these ones do not. Your interest rate is going to be capped at 4%. Right now, they are loaning them at 0.5% because it goes off of the federal mortgage lending rates. And since they had lowered them right before all of this started to happen, they are under that 4%, but they went ahead and capped it in case the interest goes up.
Shannon had a question, total payroll costs including payroll taxes.
Yes, it does include payroll taxes, but only the, it's the gross payroll minus, it's the gross payroll plus the employer only portion of the federal taxes, plus health insurance costs, plus so retirement benefits, and there's one more in there. Oh, SUTA, state unemployment, but not state, but it's only unemployment for state.
From Andrew, LLCs qualify or just subs?
LLCs will qualify for this if they have payroll or if they are doing a if you can show self-employment income for the owner. Okay. These ones have to, the PPP loans have a 10-year.
Does that include even if you do not take a draw?
No, you have to be taking a draw in order to get that. But there are, the other loan that we're going to be talking about later can be used for anything, so it's not just payroll. These ones are just to protect your payroll for your client or for your employees. The repayment terms are 10 years. Payments can be deferred for 1 year. So that means that from the date you take out the loan, let's say that you get the loan on May 15th, your payments won't start until May 15th of 2021. And then it'll be 10 years from that period. Some or all of the loan can be forgiven tax-free if the loan proceeds are used for one of the qualifying expenditures that I mentioned earlier. But they have to be paid out during the 8-week period following the loan funding date. This is actually forcing a lot of people to do an annual payroll for some of their salaried employees because they have to have everything, the entire loan amount paid out at that 8-week mark. But keep in mind, some of these are doing funding based on in increments. So you can get the loan for, let's say your loan was for $1 million, and you can do the increments so that you could do like 100 each year or each month for 10 months. well, that wouldn't work because it stops on 12/31 of 2020. So is when all of the loan has to be got out. Now then, the problem is that if you cut back payroll after February 15th, meaning you laid people off or anything like that, then you're limited in how much of that forgiveness is available to you. Unless all of those, your income workforce levels and your gross payroll levels are restored to their original amounts before June 30th. So in other words, if you have already fired everybody is gone, you can bring everybody back on under this and before June 30th and still be able to get the payroll protection program and have the loan forgiven. The other loan is the economic injury disaster loan. Okay, this is the one that most people that even if you don't have payroll, you will qualify for. This one is also an enhancements to some of their existing loans. This is up to $2 million, depending on the economic damages, and this one is based on your ability to repay. So where the PPP loan, you didn't have to have a personal guarantee and you didn't have to have collateral. This one you do have to have, you have to be able to do that. But you still don't have to have a personal guarantee if the loan is under 200K instead of going up to the full 2 million.
Real quick, Shannon had a question. Can employees claim unemployment until the loan is funded and we can rehire them?
Yes, they can. They can do unemployment up until that point. And it will also, if they are, the only thing is you can't do both loans. So you have to decide which one you want to do based on your situation. So basically what you have to do is figure out which one is going to be the best benefit for you. If you have a lot of really good employees that you want to keep up, then the payroll protection one will be better for you because it has the forgiveness amounts. Whereas this one, you don't, the only forgiveness amount in this one is capped at 10,000, where the other one is capped at your payroll. So depending on how many employees you have and how many you're trying to maintain will depend on which one of these loans you want to do. So you have to really watch which ones you're going to do and evaluate it before taking out the loan. This one, the economic injury loans is capped at the 4%, same as the other one, but the repayment terms are up to 30 years instead of 10 years. So this one will be spread out a lot more. Loans less than the 200,000 do not need a personal guarantee, but if they're over that, they have to. You are eligible to receive an advance of up to 10K with no repayment requirement. So if you apply for this, and even if you don't get the loan, it's still possible you could get the 10K advance that does not require a repayment. So depending on your situation will depend on which one of these you want to do. And this one can be used for any business expense. This one can be used for helping your employees get laptops and stuff like that to be able to work from home and setting up home offices and things like that. It can also be used for things like cost of goods, supplies, helping you to maintain your supply chain, things like that.
Andrew has a question. May be used for any business expenses that occurred during what time period? During
the year that you, so anytime between February 15th of 2020 and 12/31 of 2020. All of these loans expire 2020.
And then can it be used for rent?
Yes, it can. This one can also be used for, based off of if you have rentals and people are no longer paying, it can be used for debt recovery for those rents.
Can you repeat what dates that was?
February 15th through December 31st of 2020. Okay. Now this is just a side-by-side comparison of them. Your minimum loan amount, one is at 2 million, the other one is the lesser of 10 million or 2.5 times your average monthly payroll costs. So if your average monthly payroll costs are, you know, $1,000 a month, then it's not going to help you much, whereas the economic injury one will. So it's really a matter of deciding which loan you want to go for. Your use of proceeds, the economic.
Cindy, sorry.
I've got those two mixed up on there, so.
I was all confused. Okay, it's reversed.
Yes, those two are reversed. Jared, would you fix that on those? The use of proceeds is reversed.
Okay.
Okay, and I probably did that and didn't let him know. Okay, eligibility for forgiveness is also reversed. Sorry.
Cindy, I think the title is reversed. I think the whole column with economic should be paycheck and the other one should be economic. The left column, I think the title is reversed on top.
You're right. It's the titles are the title on the top is reversed. I don't know how I did that. The title is reversed, and the first the maximum loans is reversed. So Jared is going to fix that, and then when we send out the slides for you, that'll be fixed. Okay. Okay. So eligibility. This is for the PPP loans. Keep in mind that they just released the forms for these PPP loans this morning. They are requiring that all of the payment protection loans go through your bank. So you have to actually call your bank and find out if they handle SBA loans at all. This is going to make this process a lot longer because every bank officer is going to have to do these, and getting a hold of bank officers right now is extremely difficult because most of them are closed.
What are the parameters for use of proceeds on EIDL? I thought I read it cannot be used for business expansion.
Actually, no, it cannot be used for business expansion other than purchasing, except in certain circumstances. If you are purchasing new equipment, or if you are are trying to maintain your supply chain or increasing it, then you can use it for expansion. But they are not allowing this one to be used for purchasing, like, you know, a new building or something like that. Mostly because right now with all the uncertainty, most banks are not doing loans at all other than these SBA loans.
Do you incur the expense or purchase equipment, then apply for reimbursement, or is it based on project expense?
It's based on project expense.
And Ryan Moore, can a business do both loans?
No, they cannot. They can only do one or the other. So that's why you have to decide which one of these is going to be better for your business. Okay. Now, to be eligible for the payroll protection loan, you have to have a business, or be a self-employed individual, which would pull in the LLCs that do that have owner draws, an independent contractor. In other words, you have a Schedule C on your personal taxes. Nonprofits can get this too. So if you have churches or any kind of nonprofit that their charitable contributions are down, you can get that from here too. You have to have under 500 employees with a few exceptions. Food services and hotels have to be under 500 per location. Same with the affiliations or franchises. So if you have a franchise, let's say you have something like a Hilton or something like that, then it's based on per location instead of per the entire business together. Payroll costs that are permitted for the payroll protection program: salaries, wages, commissions. Tips are also included in this. So if you're trying to keep your restaurant employees in play, and their tips are down, you can use this to replace their tips and stuff too. Vacation, parental, family, medical, or sick leave is also covered in here. So if they have already earned vacation time and want to take it, or this will also cover the medical and sick leave act that we covered yesterday. So if you missed yesterday's, just let me know if you would like a copy of the slides from that, and we can send those to you when I send this one out. This also includes severance pay. So if you are going ahead and furloughing some people and not others, you can use this to cover severance pay also. It'll cover your group health insurance, retirement benefits such as 401ks and things like that, the state and local payroll taxes that are based on compensation. Here in Colorado, that is your unemployment tax only, but there are some states that have other. Now there are some, like Aurora has an occupational tax. It'll cover that. There's some states that have other taxes, so it will cover those. This will do payments to a self-employed individual not to exceed 100K. So as long as your income is under 100K, then you can do this one. The costs that are not permitted under these: you cannot compensate any individual in excess of an annual salary of 100K. So in other words, if you have somebody that's making 250,000, then this is capped at 100. So you can only use it for the first 100, and you have to come up with the rest of it. It does not do federal payroll taxes, and it does not do compensation of an employee whose principal resident is outside of the U.S. So if you have an employee that is, let's say you have a US-based business, but they live in Mexico City, then you can't use them. You can't qualify for that particular person. Now, that does not mean that if you have employees that are in the States and out of the States, you can use this for the people that are inside the States and just not for the ones that are outside. Qualified sick and family leave, for which a credit is allowed under the first Coronavirus Response Act. We went through this act yesterday, so if you want those slides, just let us know. What that means is that if you get a payroll tax credit, you cannot double dip. So you can't use the payroll protection plan and then also get a credit on top of it. So it's just a matter of making sure that you do that. Now, a lot of the payroll companies, such as Gusto, which is the one that I use, are supplying the reports that you need for you. So if it's really interesting, some of them won't do that. You're going to have somebody go through and figure out all of your payroll costs and everything in order to apply. Whereas others that are using, such as Gusto, are doing a special report for you to be able to do that. Well, there's a lot of typos in here. That's probably my fault. The certification requirements. The economic conditions make necessary the loan to support ongoing operations. Every business falls under this right now, so don't worry about it. The loan proceeds are going to be used to retain workers. The applicant does not have another pending loan application for the same purpose, so you can't do both of them. You can only do one. And you have not received a loan from the SBA between February 15th and December 31st. So if you have any SBA loans already in progress, you have to make sure you stop those if you want to use one of these.
Ryan Moore says, I showed my Gusto report to my bank, and they also said I need to give them January and February of this year. Also, they want our last 3-year tax returns.
Yes, they the report that I'm sure you probably pulled off of Gusto was probably last year, but they just created it, just came out with it yesterday, of a special one that will cover the first 3 months of this year too. And and they just released that like yesterday afternoon sometime. Now your financial reports you're going to have to get from your, if you're using something like Xero or one of those, you can probably pull them directly. I am helping my clients pull these, so if you need them, we can, work out, or I can show you how to pull it yourself if you don't have somebody to help you. Let's see here. Okay, the loan forgiveness. In order to have this loan forgiveness, it has to be the lesser of the loan amount. In other words, you cannot, have a loan forgiven that's more than you actually took out. Or the amount expended during the 8-week period following funding. But it's only the amounts that were used for payroll costs, payment of interest. Now, these ones are interesting because you have to have owned the property prior to February 15th. So if you bought your property after that, then you can't use this loan for that, but you can use the other one. Rent or lease obligation that was in force prior to February 15th, or utility payments if the service began prior to February 15th. So all of these are based on whether or not you actually, they're trying to prevent people from using these loans to purchase new product or new properties. At least the forgiveness part. You can still have the loan, you just won't have the forgiveness part if you, on those particular things. Now the EDL or EIDL eligibility rules are a little bit different. This one, it's for businesses and nonprofits with 500 or less employees, sole proprietorships with or without employees. So this one, you don't have to have an employee at all to do this, and independent contractors. So you don't have to, this one you can use for almost anything. The restrictions are interesting. There is no restrictions on the advance, and I don't know why I have exception there. I should have gone through these again. The 10K will be processed within 3 days of applying. However, I have had a lot of people, I'm on a lot of tax boards and a lot of accounting boards. So far, none of these loans have been processed, and I know that people have applied for them more than 3 days ago. So you have to take this with a grain of salt, that if the 3-day application, that is from the day when the loan officer contacts you, not from when you apply for it. And so they are very slowly assigning loan officers to each of these loans. Keep in mind that the SBA only has about 2,000 employees across the entire United States. And so these guys are overwhelmed right now. So it's going to take a lot longer than what people think it will to get these loans. Now this the first 10,000 does not have to be repaid, but it has to be used for one of the following. It has to be used to provide sick leave to your employees, maintain payroll, so it can also be used the same as the PPP loan. Increased supply demand. So if you're having a hard time keeping your the shelves stocked, then you can use this. This one can be used for rent or mortgage payments, and it is not it's not only interest, so you can actually pay your full loan. And it can also be used for repaying other debts too. So if you have a loan out there and you're having a hard time getting that paid, then this can be used for any, there's no restrictions on that 10K as long as it's used for continuing your business. Now then, I do have the application process for the EIDL. The loan applications were supposed to be available today, but they decided you have to go through your bank only instead of having them online. So you can't just go online for this one. Whereas the economic injury one, you go to this website, the Corona Relief website, and then you have to provide a lot of information. But it's not near as much as what it is for the PPP loan, because the PPP loan, you have to have your proof of your payroll, all of your financials and all that stuff that Ryan had mentioned earlier. Whereas with this one, you don't have to have all of those proof things right up front. Now they are going to ask for them eventually, so make sure you have your financials ready. So first off, you have to have your verification of eligibility, legal name of the business EIN number, what kind of an organization it is, meaning is it a S Corp, a C Corp, a LLC, things like that. Your gross revenues for the 12 months prior to the date of the disaster. They have said that the disaster started on January 31st. So that means that you have to have the 12 months is February 1st of 2019 through January 31st of 2020. So you have to be really cautious of making sure that your reports and stuff have those dates on it, because otherwise you're going to kick yourself out.
Can EIDL be used to get reimbursed for canceled Airbnb bookings or lost revenue?
Yes.
Can it be used for FFE expense or Airbnb properties?
They haven't said whether or not Airbnb for the properties and stuff, but it can be used for rent that is for lost rents. And so because it can be used for lost rents, we can also have an argument that an Airbnb property, now that's only if the Airbnb property is only Airbnb and has no and you are not occupying it too. A lot of the Airbnb, they'll do those, they'll rent out a room, or they'll rent out, the, an apartment above the garage, but they're still in the main house. So if you still have access to your property, as in you can actually live there if you want, then it would not count. But if it is only Airbnb and you can show that nobody lives there during any other time, then it would fall under this rent, lost rents. And they actually ask you that as one of your questions. So you have your gross revenue, and then you have your cost of goods for that same 12 months as the gross revenues. Keep in mind that most service industries do not have, and I mean services as in like in accounting, I don't have cost of goods for the most part. Whereas like a bar or restaurant, this would include your food, materials, costs, things like that could fall under cost of goods. And so you have to be careful of what you put in cost of goods. And so, if you need help with what is going in cost of goods, you can give me a call.
Jessica asks, what type of reports do we have to submit? I've been using a spreadsheet to track income and expenses.
Okay, basically they want a financial report. Financial reports are normally your profit and loss statement, a balance sheet, and usually a cash flow statement. The cash flow statement is not necessarily one that they have to have. So if you've been using Excel or one of those, give me a call and we can, I can either show you how to move it into something like Xero, which is what I use for all of my clients, or we can help you create one off of there. So it's going to take longer creating it off of a Excel spreadsheet than it would creating it from, moving you into Xero and then having Xero create that report for you.
Andrew asks, can my lost rents for Airbnb be calculated based upon my historical occupancy for the past 2 years?
Past 1 year. They'll only go back 1 year. But yes. And then commercial and residential rental properties, you need to have lost rents due to the disaster. So if somebody actually moved out before, that they, and you haven't been able to, to replace them, then you can't count it. So it's lost rents due to the disaster. There's a lot of people out there that are not going to be able to pay their rent this month. So this is hoping to help you to still be able to pay your mortgage on those. Compensation from other services received due to the disaster. So what that means that if you have insurance claims or something like that, and they are basing this one off of the normal disaster relief loans. And so some of this is like if you have a hurricane and your insurance is going to cover some of it, then you can't get the loan for it. Most people are not covered for a virus, so there's not very much that actually is coming in. However, if you are receiving a grant or a loan from a local government agency, then that would have to go in here. You have to have the business owner's information. This is anyone that has more than 50%, or you have to have at least 50%. So it's whoever is actually making the loan request. So for the most part, unless you have a really large company that everybody is under, has under, let's say 10%, then you're going to have to put in more than just the one person. but they're asking for the name, address, and their mobile phone number. I found that interesting because normally they ask for just a phone number. This one, they want your mobile phone number. Your title and the ownership percentage of the business, email, date of birth, and place of birth, which is really interesting because they've never asked for that one. Your social security number, whether or not you're a citizen. If you are not a citizen of the United States, you cannot take this loan. But you can the PPP loan as long as your business is registered in the U.S. You can do the PPP loan, but not the economic injury loan. If you have been convicted of a criminal offense, any criminal offense, you cannot take this loan. If the owner is suspended or disbarred from contracting with the federal government or receiving a federal grant, then you can't do this one, but you can the PPP loan. If the owner is subject to indictment, has been arrested in the last 6 months for any offense other than a motor vehicle violation, then you cannot do this loan. So basically what they do, now then you have to have the information on a person that's helping you, whether they are paid or not, in filling out the information. They actually have to be on your loan application that they helped you fill out the loan paperwork. Your bank name, routing number, and account number. The only reason that they need that is if you are doing the 10K automatic. It's not automatic, but if you are requesting the 10K right up front, then they have to have that so they can deposit it into your account. So far, nobody has gotten any of that money yet, but we'll see. There are other ways to apply. Contact your bank and see if they are processing SBA loan applications. If your bank is too small to be doing SBA loan applications, then you need to find a new bank. And I can help you with that if, of which ones are processing these. Most of the larger banks and most of the larger credit unions are processing these. It's just the smaller banks that don't normally do SBA loans at all that are not. Questions?
PPP loan application requirements. Will you have them later on to send it to us?
I am trying. I'm trying to get those, but it depends on each bank. Each bank is doing their own loan application thing. And because of that, there is no consistency between them. The only thing that's consistent is that you have to have your payroll reports and you have to have your financial statements for the PPP loans. Any other questions?
Is there an advantage to processing the EIDL loans through the bank as opposed to applying online?
Not necessarily. They are so swamped and so far behind that every bank is having a hard time, processing any of these. So what I've been saying is to contact your bank, find out if they're doing it, and go ahead and apply online, and then whichever one goes through the fastest is the one that you're going to do. not which loan type, but which way. It might make it easier to get them to process them if they have it in both locations. You just have to tell them I've already done it if the other one calls you.
And Kylum, you know my situation. Which loan would you recommend?
Kylum, I'm not sure. Most people are going to be better off with the economic injury loan unless you have payroll of over around, I'd say 4,000. 4,000 to 5,000 a month, then you might be better off with the PPP loan, mostly because it can be forgiven.
They also said, I have been convicted of a crime long time ago.
Well, then it depends on whether or not it was considered on what the conviction was for. I'd have to actually, yeah, we'd have to go through and figure that out. That one is actually a legal question that I can't answer, whether or not you're gonna qualify.
Andrew,
yeah.
sorry, Andrew, what are the repayment terms for the EIDL?
What are what?
What are the repayment terms?
Repayment terms for the that one is a 30-year loan. They haven't said whether or not they're gonna, that starts immediately or after the year is over. Since they have also suspended your payroll tax due dates to the end of the year and stuff like that, you're probably going to be more than likely they're going to go ahead and move it to the end of the year of when it starts. But right now they haven't said. But that one is a 30-year loan compared to the PPP loan, which is only a 10-year loan.
Shannon says, if employers are laid off, payroll handed through unemployment, does the EIDL loan make more sense to handle operating costs until we can reopen?
Yes, it does. Because if you don't have any employees, then the PPP loan isn't going to help you at all. You know, unless you rehire everybody before June 30th. If you're shut down because you cannot work at all, then it doesn't make sense to use that one. Anything else?
Andrew says, do you think PPG can qualify for EIDL and also the V5280 for EIDL, even though we switched from sub to LLC?
Yes, they will both qualify. They will not qualify for the PPP loan, but they will for the economic injury loan. Any other questions? Okay, I've got some other stuff for you. If you've already had a previous disaster loan from the SBA, so those ones that got loans during like the hurricane disasters and stuff like that, these are automatically deferred to the end of 2020. So you don't have to make any payments on any SBA loans for homeowners or for businesses until they'll start up again in 2021. There are also loans out there for homeowners and renters. They just don't fall under these SBA loans because they're not considered a business. And if you already have an SBA loan, then you can also apply for what's called an express bridge loan. The express bridge loan can be up to $25K, and you can repay it from the proceeds from the economic injury loan. And so what they're doing with this is that if you don't qualify for the PPP loan, then you can apply for the express loan and then use the EID loans to pay it once you get it. So these express loans are only if you already have an SBA loan. So keep that in mind if you already have one of those.
Andrew asks, is the 4% for the EIDL fixed for the 30 years and fully amortizing?
The 4% is both the PPP loan and the EIDL loan, and that is the maximum that they can do. So it's not necessarily fixed. So if the loan, like right now, they're doing them at 0.5 because that's where the loan amount is, but it cannot exceed the 4%. There are other loans available from the SBA. The 7A loans, which is what the PPP loans are based off of. This one can go up to $5 million for expansion, construction, purchasing equipment, working capital, and starting capital. Now, these are normal loans that they have had forever. So if you qualify for one of these, or if you're interested in those, I would wait until around the end of June and then start applying for these.
Is the EIDL at 0.5?
Right now it is, but that could change by this afternoon.
Is the interest paid on the EIDL loan deductible?
Yes.
Ryan says, I just registered a new business a month ago. I haven't received any revenue or paid myself anything yet. I was just going to put it on hold. Is there anything I can do to cover upcoming expenses and keep it going?
Not really, because the business has to have been in place before February 15th. So, but we might have some other options for you. So if you want to give me a call, we can go through some of the other options on that.
Can you show the link again to apply for the EIDL?
I'm sorry, you broke up a little bit. What was that?
Can you show the link again to apply for the EIDL?
I actually went through the application process yesterday. It was very fast. So, and it was really pretty easy to do. You just have, as long as you've got your financials in front of you, those ones are pretty easy. But if you don't have your financials in place, don't try it until you get your financials ready. Although, keep in mind that they've only got, there's a specific amount that the SBA was given to do these loans. They're going to run out of money fast. So don't wait too long or you're not going to be able to get in on that.
Can you show the link again to apply for the EIDL?
Yeah. I don't know where it is. Let's see here. That one. And I will be sending you these slides so you can actually click on the links there. You got it? Give you a couple more minutes to write it down, and then we'll, I don't remember what the other ones were. Okay, let's see here. Okay, there's also community advantage loans. These are only for what they call underserved markets. So basically it's rural communities and women and minority owned businesses. A 504 loan is only for the acquisition of fixed assets. So this is the one that if you want to buy, if you are trying to expand your business, this is the one you want instead of the economic recovery ones. They also have microloans. These ones are done through nonprofit lending organizations. It's only to the underserved markets, and the maximum on these ones are 50K, with the average loan being 14K. These are normally for a very small business that are trying to fund, usually it's cost of goods and things like that. Now keep in mind that some states have their own relief loans. So check out the, I put a website on here of which that goes to all the tax agencies. Most of the tax agencies have these loans on their websites for you. I know that Fort Collins and Denver have special local loans that you can do, and those are actually, we went over those yesterday. So if you need those, let me know. Thank you. So you can unmute yourself or whatever and ask any questions that you would like, or otherwise we are all done. Thank you very much for coming, and I look forward to seeing you guys once all this is over.
Thanks, Cindy.
Thank you. Thanks for coming.
Thank you, Cindy. Bye.
Bye.
Thank you, Cindy.
Thank you for coming.
Thanks, Cindy. Thanks, Scott.
Thank you, Marcia.
Talk to you later.
Okay, bye.